Today, I want to show you why I bought in September 22, 3 stocks that I bought for almost $5,000 in total, and let's get started. This is super low. I've been wanting to buy stocks for a very long time, and if you just look at this, here's low. This means on sale in the investing in the long-term world. There is another reason I also invested in September and why I want to invest a lot more in later 2022, and that is the September effect. Now, maybe you haven't heard of this, or maybe you have, but essentially for decades worth, from 1928 through 2021, the S&P 500 index has averaged a decline during the month of September. This does not always happen. This is actually only about a 50% chance. They have a bunch of theories in here, so it could be tax loss harvesting, where you sell stocks to lower your tax basis at the end of the year. It could be investors doing that. It could also be hedge funds doing that to really tax loss harvest with millions and millions of dollars. But this, to me, it was low. Yes, these effects exist. I had the money I've wanted to buy. It was a good sale, so I'm going to buy. Another reason I bought was after finding this article from DoubleLine, and all of these links, everything I have, will be in the description of the video, so definitely check down there if you want to read any of these things in full, as I'm going to be going through a lot in this one. But in this article, they were trying to say when they could predict the bottom and everything else. This graph on the left here, though, is very interesting. And also note, this is from June 2022. This graph shows the S&P 500 total return by year since 1970. So that's about 62 years worth that we're getting here. And you see this little thing down here for 2022? That's where we were in June. So now we went and now we're about here. Look at how low we are year over year, like compared to other years here. I can see 74, 2002, 2008, which was the big financial crisis, maybe a couple other handful of years, 2, 3, however many are here. This is very low, which is not normal. Yes, we're in a recession, but if you have the assets available, this is the best buying opportunity because it's so abnormal. The one thing that I saw, and I'm going to get to, that I know and understand is the VIX, which is the Volatility Index. I've talked about it in a couple videos on this channel, but essentially over the last 30 years, the VIX has crossed above the 40 level only 9 times. Essentially, they're calling out what they find as the peak fear that they want to see, and that's going to be in the VIX. Now, for me, I like tracking the VIX whenever it's above 30. I actually have an alert in Fidelity to go off whenever the VIX crosses 30. Now, with them predicting it to go above 40, the last time that happened was March 2020. Great buying opportunity. Some of the stocks I have from then did incredible. The last time it went above 40 before that, it looks like was around the double dip recession, 2011, 2012. But since then, we haven't gone in that much of a fear. We are in fear, though, and this is one of my other favorite times to buy when this thing hits extreme fear. Yesterday was really bad. We were at 17. Today, the markets were up. Bad for buying, good for the long run, I suppose. But if you look at metric after metric here, or indicator after indicator, it's all fear, extreme fear, fear, extreme fear, extreme fear, which just is the best time to buy. Another reason it's a great time to buy is because pretty much everything on my watch list is at 52-week lows, or right near their 52-week lows. Microsoft, 52-week low. Microsoft isn't really a small company. They're not really going anywhere. They're still making ridiculous billions of dollars a year, yet they're at this level. Google. You might be watching this on YouTube. Once again, they're making billions of dollars. Maybe you want to buy Google. Maybe you want to buy Apple. It's all up to you. But let's actually get to the stocks that I bought. The first one up here is a stock that I've bought in the past, and that is going to be Meta. So Meta is one of those companies that is just incredibly diversified. They own Facebook. They own Instagram. They own WhatsApp. They own Oculus. And I feel like I'm forgetting something else, but with the ticker change. This might actually have been the first time I've purchased Meta. I used to be buying this when it was FB, at least that's what the ticker symbol was. So we bought 13 shares of Meta, almost $2,000 at right under $140 a share. And they're a large at this point in time, almost a $400 billion market cap. There's some things that people I just don't think realize with Meta of they continue to grow, ad revenues continue to be incredible, and they're in growth mode. They are doing absurd EPS, which is earnings per share. They are making money on their shares. And this is their most recent earnings presentation. Once again, all these links will be down below. They're making billions of dollars off of users' net income. You know, just in a quarter doing almost $7 billion. Average revenue per user, US is always, $50. Pretty high, Europe's lower, rest of the world's very low still. Expenses as a percentage of revenue. Research and development is the largest category for them for quarter after quarter after quarter. Some of them it's also matching with the cost of revenue, but they're making a lot of money. It's the majority of it is still going back into R&D, and that's why they're such a growth company. So I reinvested into them. I'll show on the screen my average cost basis for Meta and how many shares I have now, because I don't know that number off the top of my head. But the next stock up here is one that I've wanted to buy for a while, and I've never gotten to. So I'm happy to show this one. It is actually Funko. Yeah, Funko. You know, the one that makes the pops. I bought over $2,000 of Funko because I really like this company. I like where they're headed. So this is not a stock at its 52-week low. 52-week range was actually $15.28. I bought around 20, so I'm in the middle here. It's really just the growth and belief in this company and the management team, and this slide should show you everything. There are so many brands and just industries that Funko is in. It is absurd. Maybe you love music or TV or movies or games. They just hit everything, and they continue to do incredible numbers, incredible growth. Here was their investor presentation, and I do want to show total addressable market. Let's say, for example, the total market for cell phones is $500 billion, and Apple owns $300 billion, and then Google owns $180 billion, and then BlackBerry and maybe the Microsoft phone owned the extra, was it $20 billion or something? That's sort of how total market works. So if you're BlackBerry and those other companies, you can say if you're on a growth pattern, you've got a lot of room to grow and take basically the revenue from other users. Funko has a lot of room to grow in the total market, and they are just getting started. Net sales doubled, probably going to do that again in the next 5 years. They're expanding into crazy categories. I do not know everything of NFTs, but I know they're doing specialty stuff there with GameStop. They're making new items. They're doing so many great things. They're going direct to consumer. They're going direct to consumer. And they're also getting into secondary, which is something I've had a concern of not buying for them for a while, because I could just buy Funkos from friends. I could buy them from Facebook, I could buy them from eBay, I could buy them wherever, and they're not making anything with that. So if they can start partnering with eBay and find ways to get into these secondary revenue items, that's just going to be a great addition to revenue to blow that maybe 1.2 to 1.5, then 1.5 to 2 billion, then 2 billion to 3 billion, 3 to 4, and just continue to grow and grow and grow. I think they're going to get bigger. I bought a bunch of shares, and that is why Funko is pretty cool. Everyone likes Funkos, at least that I know. So I bought 100 shares of Funko. The last stock up on this list is one that I had to dollar cost average into, more focused, but it's Fubo. So I bought 250 shares of Fubo at right under $4 a share. Fubo, once again, a very small company. These very small companies have been hit like freaking crazy. Fubo is an interesting one just because, as someone who cut cable, I know more people are going to cut cable. The statistics show people are going to cut cable, but sports aren't going away anytime soon. People continue to, year over year, cut cable. This is future projections of how low it's going to get. But just because you cut cable doesn't mean you're not watching TV again. You're going to get Netflix or Disney Plus or Paramount or Hulu or HBO or Showtime or all the other ones, or you can just buy Fubo and get a bunch of stuff. Or you can go do the Disney, Hulu, ESPN deal, which gets you some sports, but not all the sports. So it's difficult, but oh hey look, Ryan Reynolds. They're very much focused in sports, but they do also have a lot of other channels, which is how they can link users. So it's cool seeing the statistics that they have here of come for the sports, stay for the entertainment. Yes, you might be getting Fubo just for sports, but you can also watch other things. Sales and marketing as a spend of revenue, less money there, more money back into net income. And then you got their pricing tiers. And of course, when you compare Fubo to cable, note this is the lower tier, but still, you get a bunch of channels. There's no fees, no installation, cancel anytime. All major league networks, regional sports coverage, and 4K live sports and TV. When you look at Fubo as a whole, they're a pretty enticing growth company. I bought 5,000. Actually, let's confirm this. So I will be technical. We bought 48, 48, 79. Would have been nicer if it was 69, but oh well.
Nice.
To put in $5,000 all at once into 3 stocks is pretty crazy. Like I mentioned before, let me know in the comments how you've been investing, how you've been trying to keep your money away from inflation and getting some growth out there and doing whatever. I would love to hear what everyone thinks about my picks and also what some of your picks are. Feel free to share this video and show people that I actually spent money, which is a pretty rare thing that I do. But as always, stay safe, healthy, and be sure to keep being smart with your money.